So today our topic is about the accounting equation. So our topic for today is all about the accounting equation. When we talk about accounting equation, that means assets should always be equal to liabilities plus equity. So as we define, asset is the resources owned and controlled by the business. When we say resources, that could be in the form of cash or equipment, land, or any other assets that the business will use in utilizing for the business to earn income. And then we come to liabilities. Liabilities is the economic obligations of the business. So when we say liabilities, this results to future obligations of the business. Or in Tagalog, this is pagkakautang ng negosyo or ng business. And then the equity. Equity is the residual interest of the owner from the assets of the business after deducting all the liabilities of the business. So take note, when we say residual interest, that means yun yung natitira sa asset after nabayaran yung lahat ng liabilities. That's why when we say equity, equity is equals to assets minus liabilities. So for us to understand fully the accounting equation, let us analyze several business transactions and see how each of these independent transactions affects the assets, liabilities, and equity. So for this slide, the direction is for each transaction, tell whether the assets, liabilities, and equity will increase, decrease, or is not affected. So on the first independent transaction, the owner invests cash in the business. So what does that mean? So that means assets will increase because of the cash invested by the owner. And then for number 2, the owner withdraw business asset for personal use. So one example of this is when we say business asset, it could be in the form of cash, equipments, supplies. So those are examples of business asset which the owner used not for the benefit of the business but for personal use. Next, the company received cash from a bank loan. So in this case, the company's assets increased in a form of bank loan. So that is not from the owner, but it's a loan granted by a bank which made the asset of the business increase in a form of cash. And then number 4, the company purchased equipment with its cash. So a company can purchase equipment maybe in a form of loan or by paying cash using its asset. So in this case, the company purchased equipment by paying cash. And then number 5, the company purchased supplies on credit. So in this case, the company received the supplies but did not pay in cash right away. So when we say on credit, that means that created future obligations for the business, or that leads to a liability because the company received supplies or purchased supplies but did not pay cash right away. So this is how we analyze the transaction. For transaction number 1, the owner invests personal cash in the business. So when the owner invests personal cash in the business, the assets of the business increase in a form of the owner's investment. That's why assets increased and equity also increases. Take note, for this transaction number 1, there is no effect for liabilities because this transaction did not resulted to a future obligation of the business. And then for transaction number 2, the owner withdraw business asset for personal use. So when the owner withdraw business asset for personal use, so that means the asset of the business decreases, and then the equity likewise decreases because the investment of the owner decreases. The investment of the owner in the business decreases by using the business asset for personal use. So that is considered a drawing on the part of the owner of the business, personal drawing. So there is no effect in the liabilities, but there is a decrease in asset and a corresponding decrease in equity. Next, for transaction number 3, the company received cash from a bank loan. So when we say loan, that would lead to a future obligation of the business. So the cash of the business, which is considered asset of the business, increases but resulted to a corresponding increase in the liabilities of the business. Take note, a bank loan or any other liability for the business does not affect the equity, not unless the loan granted to the company will incur interest when the interest is being paid by the business. That's the only time that the equity is affected because that will result to a expense on the part of the business. Next, for transaction number 4, the company purchased equipment with its cash. So as we can see, equipment is an asset and cash is also an asset. So the company purchased equipment. When the company purchased equipment, that means the equipment will form part of the asset of the business, and that is an increase on the asset of the business. But the equipment purchased was also paid by another asset, which is in the form of cash. So cash is an asset, and the cash will be paid for the equipment of the business. So that means that is a decrease on the asset. So let's say if the equipment cost 20,000, so the asset of the business increased 20,000 in the form of equipment, but it will likewise decrease its asset in a form of cash amounting to 20,000. So parang napalitan lang yung asset from cash, napalitan ng equipment. So but just the same, kung 20,000 yung worth ng equipment, 20,000 yung nadagdag sa asset, 20,000 din in a form of cash ang mapabawas sa asset ng business. So basically, there is no effect. So zero yung magiging effect sa asset. So yung transaction number 4 will have no effect on the liabilities and the equity. At the same time, we will consider it as a increase and a corresponding decrease in the asset or no increase at all. For number 5, the company purchased supplies on credit. So that means the company received supplies which will be considered an asset of the business, but it was in the form of credit. So that means that resulted to a future obligation of the business. So that increases the liabilities. So when the company purchased supplies on credit, assets increases and liabilities likewise increases. There is no effect in equity. Okay? So as you can observe here, for the accounting equation, if you will try to analyze these transactions, if you can observe any increase in asset could result to a corresponding increase in equity or liability. So, pag may effect sa asset, for the accounting equation to 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 remain balanced or equal, because accounting equation is assets should always be equal to liabilities plus equity. So if there is an increase in asset, it could lead to a corresponding increase in equity or liability. So in no case wherein you can see a transaction wherein assets increases and equity will or liability will decrease. So it's always balance. So the effect will always be balanced. So a decrease in asset could lead to a corresponding decrease in equity or decrease in liability. An increase in asset could lead to a corresponding increase in liability or increase in equity. But the accounting equation will always remain balanced. Okay? There are also transactions wherein, as you can see, number 4, only the assets were affected for a certain transaction, but the amount of increase in asset has a corresponding decrease in asset of the same amount for the accounting equation to remain equal, or assets will always remain equal to liabilities plus equity. Let's have another exercise. So for now, give the effect of the following transactions on the accounting equation. So on May 11, 2021, Vongu opens Vongu Repair Services. On the transaction summary table, indicate the effect of each transaction on each account. So put a plus or positive sign to signify increase, or a minus or negative sign to signify decrease. Indicate the amount of increase or decrease for each account. Okay, so as you can see here on the given table, we have assets, liabilities, and owner's equity. So the accounts affected for assets will be the cash, accounts receivable, and supplies. For liabilities, we have accounts payable and notes payable. And for our owner's equity, we have Vongo Capital and Vongo Drawings. So for the given transactions here, we have for transaction number 1, we have Vongo invested 60,000 cash in the business. And for transaction number 2, bought 1,500 worth of supplies for cash. Next, purchased 10,000 worth of supplies from Digong to be paid after 30 days. Next, received 25,000 cash for services rendered. And then for the next one, issued a note for the supplies purchased from Digong. And then rendered services to client on account 5,000. Next, settled the note with Digong. And then made personal withdrawal amounting to 10,000. And then received 2,500 as payment for services rendered on account. And the last one, invested additional cash of amounting to 24,000. So this is how we analyze the transactions. So for the first transaction, Vongo invested 60,000 cash in the business. So as you can see there, the cash increased amounting to 60,000, and then that is an investment of Vongo, so that would form part of the equity or the capital of Vongo, which will be considered an increase in equity. Next, bought 1,500 worth of supplies for cash. So supplies is an asset, and it was paid for another asset in the form of cash. So as you can see here, there is a decrease in cash amounting to 1,500 and a corresponding increase in another asset, which is supplies, amounting to 1,500 also. Next, purchase 10,000 worth of supplies from Digong to be paid after 30 days. So as you can see, Vonggu received supplies from Digong amounting to 10,000. So that will be an increase in asset in a form of supplies. So we have there an increase of 10,000 for supplies. And that supplies will be payable after 30 days. So that will be considered a liability of Vonggu to Digong. So it is also an increase in liability in the form of accounts payable. Next, receive 25,000 cash for services rendered. So services rendered was paid immediately by 25,000 cash. So cash increased by 25,000. And of course, when services are rendered, that will be considered an income on the part of the business. And any income on the part of the business will be considered an increase in the equity. So that's why we have there an increase in owner's equity of 25,000 for the account of Vonggu Capital. Okay, so an increase in cash amounting to 25,000 with a corresponding increase in equity amounting to 25,000. Next, issued a note for the supplies purchased from Digong. Here, the accounts payable to Digong by Vonggu were converted to a notes payable. When we say issued a note, that means Vonggu issued a promissory note for Digong. This transaction could probably it could happen because maybe on the part of Vonggu, he will not be able to pay his liability to Digong within 30 days. So Vonggu decided to issue a promissory note to extend the payment or the due date of the payment for Digong. That's why he issued a promissory note. But take note, class, that will not be an added liability on the part of Vonggu. It will still be, the liability will remain 10,000, but from being recorded as accounts payable, it will be converted to a notes payable. So as you can see there, it was a decrease in accounts payable of 10,000 and an increase in notes payable of 10,000. But just the same, the liability remains 10,000. Next, rendered services to client on account. So when we say rendered services to client on account, that means the services have been rendered, but Vonggu have not been paid for the services rendered. That's why it's on account. That means that will be a receivable on the part of Vonggu. So the client did not immediately pay cash when Vonggu provided services to that certain client. So that's why there is an increase in asset, but not in a form of cash, but in a form of accounts receivable. And that services rendered will be an income on the part of Vonggu, which will be an increase in owner's equity. Okay? Next, settle the note with Digong. So now, when the note is settled, that means Vonggu will pay cash to Digong to settle the note issued to Digong. So the account affected is no longer the accounts payable because it has been converted to a notes payable. So once Vonggu decided to settle the account or the liability to Digong, that will decrease the liability in the form of notes payable. So you can see there is a minus minus or negative 10,000 on the notes payable, and then a deduction, a corresponding decrease in the asset in a form of cash. So you can see there, decrease in asset in a form of cash and a decrease in liability in a form of the notes payable. So you can see here, after Vongo settled the note with Tigong, the liability is already zero. No accounts payable, no notes payable. Okay, next, made personal withdrawal 10,000. So this time, the cash or the asset of the business in a form of cash decreased by 10,000 because of personal withdrawal of Vongu. So as you can see in the table, there is a decrease in cash amounting to 10,000 and a corresponding decrease in owner's equity in the form of Vongu drawings amounting to 10,000 also. Next, receive 2,500 as payment for services rendered on account. So now, when we say receive payment for services rendered on account, take note, the income will no longer increase because the payment received will be deducted to accounts receivable, because when we say rendered on account, that have been previously recorded as an income. So as you can see in the transaction, it received 2,500 cash as payment for services rendered on account. So that could be probably a partial payment from the services rendered of 5,000, which was previously recorded as an increase in equity in the form of 5,000 and an increase in accounts receivable, so that the income is no longer affected. So this transaction is affects only the assets, which is an increase in cash of 2,500 and a decrease in accounts receivable of 2,500. And finally, we have here invested additional cash, 24,000. So when we say additional investment, that will increase the asset of the business in the form of cash amounting to 24,000 and a corresponding increase in equity, which is an additional capital of Vongu amounting to 24,000. Now let us discuss the expanded accounting equation. When we say expanded accounting equation, that means assets equals liability plus equity, wherein equity, we will discuss here what forms part the equity, because when we say, when we go back to assets, assets could be in the form of cash, accounts receivable, supplies, equipment, lands, and the likes. And when we discuss liability, liability could be in the form of accounts receivable, accounts payable, notes payable, loans payable, mortgage payable, anything that is that could be, a future obligation on the part of the business. Now, when it comes to equity, what forms part equity? So when we say equity, under equity, there is the capital deducted by drawing and then added by income and deducted by expenses. So take note, equity is capital minus drawing plus income minus expenses. Okay, so let us discuss further the elements of the accounting equation before we proceed with the other activities. So let us define assets. So as you can see here, assets are the resources owned and controlled by the firm. It is also referred to as the economic resources of the firm. So take note class, pag sinabing assets, ito yung mga ginagamit na resources ng business para kumita. Like, the business needs cash to pay salary for its employees, to buy supplies, to buy equipment, and also the company will like have equipments to produce a product or to provide services. So these resources helps the company or the firm earn income. Okay, so resources or assets of the business could also be used to pay future obligations or for expansions of the business and the likes. Okay, now let us come to the liabilities. Liabilities are economic obligations of the firm arising from past events which are to be settled in the future. So, bakit nga ba kailangang magkaroon ng pagkakautang or bayarin ang business? There are cases kasi class wherein the owner of a certain company or a firm has do not or do not have enough personal resources to to expand the business or to help the business operate. So, there are times na kailangan mangutang ang company para mas madagdagan yung kita ng company. So, hindi naman ibig sabihin na pag may liabilities ang business, ibig sabihin malulugi agad. There are cases wherein kailangan talaga na magkaroon ng mga pagkakautang ang business para mas ma-maximize yung income ng business. Okay? Now we have here the equity or the owner's equity. So as you can see there, equity are the owner's claims in the business. It is the residual interest in the assets of the enterprise after deducting all its liabilities. So take note class, when we say equity, sabi nga, just like what we have discussed in the previous slides, equity is capital minus drawing plus income minus expenses. So pag sinabing residual interest, ibig sabihin, ang equity na dadagdagan ng investment ng owner sa business, nababawasan ng expenses, nababawasan ng drawings, at nadadagdagan ng income. So, ibig sabihin, any liability by the business will also be deducted in the equity or the asset minus the liability, yun yung magiging part ng equity. Okay? And then the capital. Capital is the value of cash and other assets invested in the business by the owner of the business. So, that's basically yung ininvest or personal resources ng owner na ininvest sa business. So, it could be in a form of cash and other assets. So, pwede yung equipment, sasakyan, land, building, pwede yan lahat na maging investment ng owner sa business. Okay? And then the drawing is an account debited for assets withdrawn by the owner for personal use from the business. So, ito naman yung binabawas sa capital or sa equity because it is an asset withdrawn by the owner intended for personal use. So, pwede yan na, halimbawa, yung owner nag-withdraw ng cash kasi gagamitin niya for personal use. Yung cash, part yun ng asset ng business and then gagamitin niya for personal use. So, magiging drawing yun on the part of the owner. Or pwede rin naman na kumuha siya ng mga supplies sa company or sa business niya kasi gagamitin niya for personal use. Halimbawa, yung business may mga stocks na supplies like mga coupon or mga utility supplies. Tapos gagamitin niya sa bahay. So magiging drawing yun on the part of the owner. Kabawasan yun sa investment niya sa business. Okay? Now we have here the income. Income is the increase in economic benefits during the accounting period in the form of inflows of cash or other assets or decreases of liabilities that result in increase in equity. Income includes revenue and gains. Income increases resources resulting from performance of services or selling of goods. So, as you can see there, during the accounting period. So, economic benefits during the accounting period. Take note class, ang income for a certain accounting period or certain year of operation of the business will automatically be added to the equity of the business once that accounting period ends. So, kung ano man yung income ng business, let's say, nag-operate yung business for the whole year of 2021, yung income ng business for 2021 from January 1 to December 31, 2021, at the end of the year, lahat ng income na yon will be added to the equity. That's why sa expanded accounting equation, income is added to equity. So, ang income ng business for a certain period hindi siya ipo-forward to the next accounting period. So, at the end of the accounting period, idadagdag siya agad sa equity ng business. Kaya nakalagay dyan is the increase in economic benefits during the accounting period. Kasi ang income is every year yan kinocompute sa business. And after the end of the accounting period, added siya agad sa equity ng business. Okay? Expenses or decreases in economic benefits during the accounting period in the form of outflows of assets or incidences of liabilities that result in decreases in equity. It is a decrease in resources resulting from the operations of the business. So here, decreases in economic benefits during the accounting period. Take note class, yung income ng business for a certain accounting period, babawasan yun ng lahat ng expenses for that certain accounting period as well. So, kung yung income for 2021 is 1 million and yung expenses for the whole year of 2021 is 500,000, yung expenses na 500,000 i-deduct sa income na 1 million and yung tira doon, which is the 500,000, yun na lang yung magiging addition dun sa equity ng business. That's why expenses decreases in economic benefits during the accounting period. Hindi pwede class na yung expense ngayong year, iti-deduct ulit sa next year na operation ng business. So, once na na-deduct na yan for the year, hindi na yan pwedeng i-deduct the following year. Kaya pag nagko-compute ng expenses ang business, only for a certain accounting period. Okay? And dito, sa definition, sabi dyan, it could also be incidences of liabilities that result in decreases in equity. Take note, lads, hindi naman talaga actually yung liabilities yung makakabawas sa equity, but it's the expenses incurred or the expenses na kaakibat ng liabilities like pag umutang yung company, meron yung binabayaran na interest, and yung interest na yun, magiging expense yun on the part of the business, yun yung nagiging bawas sa equity, not exactly the liability itself, but the expenses which resulted from incurring the liability. Okay? And other expenses could be the decrease in resources resulting from the operations of the business. So, take note, para mag-operate ang business or para mag-incur ng income, palagi yan na may katapat na expenses. So, halimbawa, magpo-provide ka ng services, mag-hire ka ng employee. Siyempre, yung employee mo, yun yung tutulong sa'yo for the company to provide services to your clients. And of course, yung employee mo, kailangan mong bayaran yun because they provided services for your company. So that's an expense on the part of the company. Or halimbawa, when you provide services, you use equipment or you use supplies. So, pag nagamit mo na yung supplies ng business, magiging expense na yon. Mako-convert na yun to expense, which is deducted to the income of the business for that certain period. Okay, now let's have another exercise. So for the directions, arrange the following asset, liability, and equity titles in a table. So for the assets, we have the cash, accounts receivable, office supplies, repair equipment. And then for the liability, we have accounts payable. And for the equity, we have here Jerome Garcia Capital, Jerome Garcia Drawings, revenues, and expenses. So as you can see here, we will use the expanded accounting equation. And then use additions and subtractions to show the effects of each transaction in the accounts in the accounting equation. Show the balances of each account after posting all the given transactions. So this time, itatry na natin magbalance ng transactions using the rule or the principle of accounting equation. Okay, so here are the transactions for Jerome Garcia. So Jerome Garcia started a new business named J. Garcia Repair Services and completed these transactions for August 2021. So here are the several transactions which transpired or occurred for the month of August. So these are the transactions that we will analyze as we proceed with this activity. Okay, we have here the table. So as you can see, on the leftmost part of the table, we have the date, and then for the assets, we have cash, accounts receivable, repair supplies, and repair equipment. For liability, we have the accounts payable, and then for equity, we have J. Garcia Capital, J. Garcia Drawings, revenues, and expenses. Okay, let's analyze each transactions. For August 1, we have Garcia invested 48,000 cash in the business. So when Garcia invested 48,000 cash in the business, we have there an increase in cash and an increase in capital. And then for another transaction for August 1, we have there rented office space and paid 800 cash for the August rent. So you can see there, we have there a deduction in cash amounting to 800 and a decrease in equity in the form of expenses, which is also 800 pesos. For August 3 transaction, we have purchased repair equipment for 22,000 by paying 12,000 cash and agreed to pay the balance in 3 months. Okay, so as you can see there is an increase in asset of 22,000 in the form of repair equipment and then a decrease in cash of 12,000 because 12,000 was paid upon purchase of the equipment. And then the balance, so 22,000 minus 12,000, we have there 10,000, which forms part of the liability or the accounts payable. So as you can see there, 22,000 minus 12,000, 22,000 increase in asset minus 12,000 decrease in asset, the net increase in asset will amount to 10,000, which has a corresponding increase of also 10,000 in liability. So as you can see from August 1 transaction to August 3 transaction, the accounting equation remains balanced. For the assets, the total of assets is still equal to the total of liability plus equity. For August 5, we have there purchased repair supplies by paying 1,500 cash. So as you can see there, only the asset was affected for this transaction on August 5. So there is an increase in repair supplies amounting to 1,500 and a decrease in cash amounting to 1,500. For August 6 transactions, we have there completed repair work and immediately collected 420 cash for the work. So, as you can see there, we have an increase in equity amounting to 420, which was recorded for us or um, recognized as a revenue of the business or an income of the business, and a corresponding increase in asset in the form of cash amounting to 420 pesos also. For August 8, we have here purchased 1,350 of repair equipment on credit. So when we say on credit, that means that will result to a future obligation kasi hindi binayaran agad ng cash yung pagbili ng repair equipment. So as you can see in the table, we have there for August 8, an increase in repair equipment amounting to 1,350 and an increase in liability of 1,350 or an accounts payable of 1,350 pesos. Okay, for August 15, completed repair work and credit in the amount of 8,000. So, pag sinabing completed repair work, once completed na yung work, dapat i-recognize na yung income. Regardless kung may na-receive na bayad o wala. Okay? Remember, sa accounting concepts and principles, yan yung revenue recognition principle or the accrual principle wherein once services have been rendered or goods have been delivered, income should be recognized right away regardless if it has been paid in cash or not yet paid in cash. So dito, meron tayong increase na 8,000 sa revenue or sa income ng business and an increase in asset pero not in a form of cash but in a form of accounts receivable because the repair work was on credit or receivable pa. Hindi pa nabayaran ng client yung company ni Jerome Garcia for the services completed. For August 18, purchased 700 worth of repair supplies on credit. So makikita nyo dyan, merong increase sa asset sa repair supplies na 700 and because it's on credit, ibig sabihin hindi binayaran agad ng cash, kaya nagkaroon ng future obligation. So nagkaroon ng increase accounts payable na 700 pesos also. For August 20, paid cash for the repair equipment purchased on August 8. So, makikita nyo dyan sa transaction ng August 8, meron dyan ng liability na 1,350 and an increase in repair equipment of 1,350. So, take note, pagdating ng August 20, hindi mo na kailangan mag-increase ng 1,350 sa repair equipment kasi recorded na yun yung repair equipment ng August 8. So, ang magkakaroon na lang ng effect yung transaction ng August 20, pag nagbayad ng cash, ang mawawala is yung liability, yung accounts payable na 1,350. So, mababawasan yung accounts payable ng 1,350, mababawasan din yung cash ng 1,350. Take note, yung repair equipment, andyan pa rin. Nasa asset pa rin yun ng business. So, nabawasan lang yung liability kasi binayaran na ng cash yung accounts payable. But the equipment remains in the business. So, andyan pa rin yung 1,350 na equipment. Binayaran lang yung liability nun. Okay? For August 24, billed a client 2,400 for work completed. The balance is due in 30 days. So, take note dito, billed a client. Pag sinabing binigyan ng bill yung client, ibig sabihin, services have been rendered pero wala pang bayad. So, merong magkakaroon ng receivable yung business doon sa client. Kaya binigyan ng bill. Para din lang naman yung katulad ng sa bahay nyo, di ba, may electric bill. Bakit may electric bill? Kasi nag-consume na kayo ng electricity pero hindi niyo pa yan nabayaran agad. That's why you are billed. So, ganun din sa business. So, pwedeng nag-render na ng service pero wala pang na-receive na bayad. So, once na nag-bill na yung company, yung business, sa client, ibig sabihin, na-render na yung service. So, pag na-render na yung service, meron ng income yung company. Pero wala pang na-receive na cash. So, kaya makikita nyo dyan sa table, merong increase ng 2,400 sa revenue and a corresponding increase in asset but in a form of accounts receivable. Okay, for August 28, received 5,000 cash for the work completed on August 15. So, balikan natin yung August 15. Sa August 15, meron tayo dyan ng accounts receivable na 8,000 and then may corresponding increase yan sa revenue na 8,000. So, pagdating ng August 28, may na-receive na daw na bayad doon na 5,000 sa services rendered on August 15. So, take note, pag may na-receive na cash, wala na yung dagdag sa revenue. Meron na lang yung dagdag sa cash. Kaya makikita nyo sa table, nag-increase yung cash ng 5,000 tapos nabawasan yung accounts receivable ng 5,000. Wala na yung effect sa revenue. So, take note class, not at all times na makaka-receive ang company ng cash, ibig sabihin, income yan on the part of the company. Minsan, settlement lang yan ng mga receivables, pero hindi na yan income. So, hindi lahat ng nare-receive na cash ng business is an income on the part of the business. Depende pa rin yan sa transaction, okay? That is why it is very important that we analyze transaction before we record it. So for August 30, we have here, pay the assistant's salary of 1,100 cash for the month. So dito, this is an expense on the part of the business. So as you can see there is a decrease in equity in the form of expenses of 1,100 and a decrease in asset in the form of cash, which is also 1,100. So we have here the complete posting of all the transactions which transpired for August for J. Garcia Repair Services. So makikita nyo dyan, this is how we prove kung it is indeed true that asset is always equal to liability plus equity. So, makikita nyo dyan, lahat ng transactions for cash, 48,000 minus 800 minus 12,000 minus 1,500 plus 420 minus 1,350 plus 5,000 and then minus 1,100, that will total 36,670. So, yan yung magiging balance at the end of August or at the end of the month ng cash. For the accounts receivable, we have there 8,000 plus 2,400 minus 5,000 and the balance is 5,400. For repair supplies, we have there 1,500 plus 700. So we have there the total 2,200. And then we have the repair equipment, which is 22,000 plus 1,350. And the total is 23,350. So if you will total the asset, cash is 36,670 plus accounts receivable of 5,400 plus repair supplies of 2,200 and then repair equipment of 23,350, we have there a total of 67,620. And then we come to the liabilities. The total of the liability is 10,700. That is 10,000 plus 1,350 plus 700 minus 1,350. And then the capital is 48,000. The revenue is 420 plus 8,000 plus 2,400, which totaled 10,820. And for the expenses, That is 800 plus 1,100. So the total expenses is 1,900. So if you can see there, 48,000 capital plus the revenue of 10,820 minus 1,900 expenses. So for the equity, we have 56,920. And, diba, um, liability plus equity should equal the assets. So we have to add 10,700 liability plus equity of 56,920. So that will also total to 67,620, which is the same as the total asset. So that means asset is equals to liability plus equity.